What's up, everybody? This is Devin James here, the investor's agent out in beautiful Phoenix, Arizona. Market predictions for 2021. Yes, this is a very exciting time for investors in Phoenix, Arizona, and real estate investors really all over the country. Let's start with a couple different topics here. Number one, we're going to talk about mortgage delinquencies. This is a huge topic when considering foreclosures and real estate markets kind of coming to a crash. You have to look at mortgage delinquencies, and we're in a very interesting spot right now with delinquencies, and they can be a big telltale sign to when the next crash is coming. Number two, we're going to talk about evictions, kind of in a similar boat for renters, right? There are a ton of people not paying rent right now, and nobody's really talking about this. And this is at a national level, this is at the states and city level, right? There are people not paying rent right now, and we get it. Unemployment rate is up, right? People can't work, economies are closed. So we have to talk about the evictions and what that means for the real estate market. Number three, we're going to talk about migration. That is people traveling, maybe they're leaving their apartment buildings with thousands of other residents to try to find another place to live. Maybe they want to find a cheaper cost of living. Maybe they want just their dream environment. Now people are working remote. Companies are comfortable with employees working remote. So we have options now, right? So where are people going? Where are they migrating? How is that playing out? How is that going to affect the real estate market today and going forward, right? Number four, we're going to talk about supply and demand. And arguably, this should be all the way up at the top, but I want to talk about supply and demand because that is really the case of what's happening right now in the real estate market. If you've checked your Zillow, price estimate or whatever, in the last, couple months, you've recognized, holy cow, I'm sitting on a bunch more equity. And if you're in the Phoenix area, you're like, wow, I'm sitting on a tremendous amount of equity right now. What should I do? Should I put that up for sale? You're probably hesitant to do that because what are you going to go buy? Supply's low. Are you going to rent for 6 months, a year? How long is that going to play out? A lot of questions, right? So let's talk about the supply and demand stuff as well. Finally, I'm going to end with my predictions for the 2021 real estate market at a national level, but more specifically here in the Phoenix metro area. That's what I'm really interested in. This is where my portfolio is. Mortgage delinquencies. What we're going to talk about here is let's compare, just for reference, because everything's relative, right? So let's talk about where we were in the last real estate crash. 2009, highest point was 9.3% of all mortgages, regardless of the loan type, were in default. That's 9.3% of mortgages across the country were behind, were delinquent. Now, I didn't break up that number to figure out if it was 90 days, 60 days, 30 days, or whatever, but we're just aggregating that number just for a frame of reference, right? So at 9.3% mortgages were delinquent. As of November 2020, which is the most recent number that I could find at this time, the total percentage of delinquent mortgages was 7.65%. So wow, not too far off of where we were back in the 2009 number of 9.3%. So that's something to definitely consider. 7.65% of all mortgages in this country are delinquent right now. That's 30 days, 60 days, 90 days, and we'll look into this a little bit later. It's very heavy on the 90-day, over 90-day delinquent status. This is something that is really, really shocking to me. If you look at the loans, right, you got your conventional, your VA, your FHA. If we break out the FHA category by itself, this is absolutely incredible. So according to the Mortgage Bankers Association, which is where I'm getting these stats from now, the Mortgage Bankers Association is telling us that 10.76% of FHA mortgages are delinquent over 90 days, 90 days past due. 10% of people with an FHA loan have not made a payment in over 90 days. That is absolutely incredible to me. These numbers are terrifying. These are 2008, 2009 numbers, and we really, really need to take a look at this and consider it. Now, what's different between this today and 2009, right? Well, the difference is absolutely massive. We have a government that is allowing loans to be in forbearance. They've put the CARES Act into place, right, which is telling the mortgage servicing companies that, look, you can't foreclose on these guys right now. And that is set to expire by the end of the year. So what's gonna happen is kind of the real question right now. Is the government gonna decide to extend that? Is there gonna be a new act put into place? I'm not sure, guys. I don't know what that looks like. If I was to make a prediction about that, I would say we're probably not gonna extend that, right? We've got the vaccine, about 6 of them, right, that are kind of in production right now, getting distributed and beginning to get allocated. So at the end of the year, we're gonna have a lot of these mortgages, 10%, almost 11% of FHA loans are about to go into foreclosure, which is a very, very high number. So let's take that national number down into Phoenix level. So what are we looking at? We're looking at 5.3% of mortgages in Phoenix are delinquent, which is, so this time last year, we were at about 3.7%. 5.3% is where we're sitting now, about 2%, 2 and something, up from last year. Now, let's look at what does that mean for 2008 and 2009 to just put that in perspective. So obviously, 5.3% is a lot lower than the 7.65%. That's the national number right now. So that's really interesting, right? So the Phoenix market is, in the last kind of economic downturn, we were a very, very bad performing market, right? And so I would imagine if we were kind of going to that same kind of path right now, we would be looking at a number that was 7.65 or higher at least, right? So in 2008, 2009, we got as high, actually 2010 was the height of it in Phoenix. So in Phoenix, if we take that number of mortgage delinquencies just for Phoenix, in 2010, we peaked at 16.8% delinquent mortgages in the city of Phoenix, which is absolutely astronomical. That is unreal, guys. The other thing that is different right now is that 60% of houses were underwater in 2010. 60% of houses were underwater in 2010. Meaning, not physically underwater, right? Meaning that the mortgage was actually more than the house price itself. So which is, that's crazy. And ask me what that number is today. It's 2.7% in Phoenix right now. Believe it or not, there are some that are underwater, right? But it's 2.7. Compare that to 60%. So the difference here today, guys, is that if I'm 5.3%, delinquent, 5.3% mortgages are delinquent in Phoenix. If I'm one of those guys and I'm looking at Zillow, I'm calling up my real estate agent, getting me a CMA or whatever, and saying, look, like, should I just sell this thing? I can't make the payment. What if the moratoriums run out at the end of the year? Am I going to lose my home? Listen, I've got choices this time. I can put my house on the market. I can get that thing sold. I can cash out some equity and I can go and get me a place to rent, right? Until I figure out kind of the next steps. So we're in a very different situation than we were in the prior economic downturn, right? Number 2, let's talk about eviction. So according to the Aspen Institute, there are estimated to be 30 to 40 million Americans that are at risk for eviction right now. 30 to 40 million. That's a lot, guys. Obviously, that's at a national level, right? But that means these guys aren't paying rent. They're getting protected. Maybe the landlords are getting some money from the states or local governments or whatever. But the CDC has an order right now due to the pandemic. You don't have to pay rent and you will not get evicted, right? Now, all of this stuff is kind of expiring at the end of the year here. So it's going to be very interesting to see how this plays out. I think the eviction scenario is going to play out very similar to the mortgage delinquency scenario, where the moratorium is going to run out. There's going to be, we've got the vaccine coming. We've got some light at the end of the tunnel here, guys. And I think that, stuff's going to come to a head here pretty soon. This is in addition to the fact that the U.S. was facing a housing crisis shortage already pre-COVID, right? According to the National Apartment Association, the U.S. needed almost 5 million new apartments to meet housing demand in 2030, by 2030. We're nowhere close to meeting that 5 million apartment number, and that was pre-COVID. In the Phoenix market, about 86.2% of renters in May paid their landlords. This was the latest number that I could find, so please, if you have a more recent number, go ahead and put it in the comments. I'll add it to the description, update the video here. Now, 86% in May, this was kind of like the peak of unemployment, the economies were still closed and stuff like that. That is not horrible. Some more perspective would be that about 89% of folks in Phoenix made their payments, rental payments, in May of 2019. So the same time in the prior year where things were doing great actually. So that's not too far off. However, the one thing that does make me a little bit worried is how much of the 86% folks that paid were using government funds or some sort of other incentive programs that we have in place right now. That number is still unclear to me, and the statistics from the National Multifamily Housing Council doesn't seem to break that up, or I wasn't able to find that. So if you have more information, please add that in the comment below. So number 3 is migration. Now, migration to me might be one of the most interesting differences between this real estate correction versus 2008, 2009. So the CDC has created social distancing requirements, right? So in the back of your mind, you're like, hey dude, don't get too close to me. You gotta stay 6 feet away and all this kind of stuff. And if you're living in close quarters, that's very difficult to maintain and manage and stuff like that. So you might be considering literally just moving into a space that is your own, right? And that might be a different rental, that might be buying your own house. And that's typically more of like a suburban type of thing. So we're seeing this migration pattern out of cities like, New York City, for example, to New Jersey. We're seeing migrations to cities like Phoenix, which is absolutely on fire for population growth. We're seeing it to Idaho. I mean, Boise is just absolutely on fire right now. So we've got a lot of things happening where people are just like, look, man, I mean, this urban type of lifestyle, that was great when I wanted to like walk to my job, walk to my work and all that kind of stuff. But restaurants aren't even open right now. My work is just all remote. Like none of that stuff kind of matters anymore. So it's like, if I've got the privilege, the advantage of telecommuting, look, I am just opened up my real estate search to, not only my neighborhood, my backyard, this, 20-mile radius or whatever. I've got the whole country that I can look to now. So that's really changing the game for the real estate market. And Phoenix is the fastest growing city in the nation, according to the US Census Bureau, right? #1 city in the entire country. It's absolutely expected to double in size by 2040. Phoenix is expected to double in size by the year 2040, which is absolutely incredible because we're sitting at about 1.7 million people right now. 1.7 million people expected to double in 2040. Look, Phoenix, guys, is a very business-friendly environment. Like, this is a great place to start a business. This is a great place to work at a company. There are plentiful job opportunities. We've got some companies, big name companies that have headquarters here, at least corporate offices and stuff like that. Some big names that bring lots of job opportunity. I know I hear headlines all the time. Amazon just throwing industrial space and corporate offices all over the state. We've got tons of government incentives for businesses to come to the state. And there's just like not a lot of blockers for the business environment, which that's absolutely great to promote economic growth. Not to mention the cost of living is less in Phoenix than the national average. That's absolutely incredible. Home ownership is still affordable. Yes, the prices are sky high right now, but it is affordable. It's relative, right? So if I'm coming from California, I'm looking at Phoenix prices of being about average of $300,000, and I'm like, this ain't nothing, man. I could buy this in cash, right? So it's all relative. If you grew up in Phoenix, you're thinking this is astronomical. They can't go any higher, but trust me, they can and they will go higher. So we've also added more advanced jobs to Phoenix area. As I mentioned earlier, we've got about 60% of jobs in Phoenix today that are in the category of advanced or kind of like recession tolerant job categories, right? What does this all mean? Migration to Phoenix, what does that mean for the real estate housing market? Well, I think it means a couple different things. #1, our market's not going to be hit as hard as it was before. Take a look at numbers for Nevada, take a look at Las Vegas. I don't know the last time you went to the Vegas Strip. I haven't been there for ages. And so we're going to be in a very different situation. We've got a booming job market. We've got population growth that's off the chart. So let's bring this all back together with the supply and demand. reason housing prices at a national level are so high right now, and if you see, you cannot miss the headlines saying we've just hit a new high, we've hit a new high, this hit a new high, record growth, right? This is unbelievable. What goes up must come down, and if it's too good to be true, this cannot continue forever, right? You're probably right if it's too good to be true. We just hit a new national average of 320,000 according to Redfin at a national level, right? So it's absolutely incredible. Why are housing prices exploding in COVID? Like, nobody would have thought that. Nobody would have predicted that, right? This was the pre-COVID brain. Like, we had no idea what to expect, right? I'll tell you, it's because of inventory. We have the lowest level of real estate inventory, houses on the market, that we've ever had versus the demand. In Phoenix, the inventory is less than 1 month. Right now, I'm looking at the MLS, we're at 0.8 months. We're at 0.8 months, meaning that you put something on the market and it sells immediately. You know, you've got those, hopefully you've never worked with an agent that was like, whatever I touch turns to sold. Yeah, you can tell that guy now, or gal, yeah, whatever you don't touch like turns to sold. It doesn't matter. Like, you could literally fog a mirror and sell a home today. Market prediction. So the real estate market is going to crash in 2021 at a national level, okay? Meaning that this is going to pass into the Phoenix, Arizona real estate market. There's just no way around this, right? Yes, I am bullish Phoenix, Arizona in the long term. I'm bullish real estate in the long term. Like, we're going to be fine. If you're looking at 10, 20 years from now, you don't even need to be concerned with crashes. You know, if you've got cash flowing property, you're set, you're making money, you'll be okay. If you got a good property manager, you're doing a good job managing your own properties, everything's going to be fine for you. Take care of your people, make sure they're okay, get government assistance, talk to your tenants, make sure that you have open communication. Everything's going to be okay. The real estate market is going to crash between Q2 2021 and Q4 of 2021. We're very, very close to seeing the first kind of couple dominoes fall, the first couple cards collapse, right? We're getting very close to that. I think come the end of the year, it's going to be very interesting to see kind of what the government does, what the CARES Act is about to do. It's going to be very interesting to see how local municipalities are dealing with the eviction and mortgage delinquencies. But guys, look, I think that this is unavoidable. This is something that is building. There's a lot of pressure, and there's a house of cards here, and they're stacking up, and the pressure is absolutely massive because of the COVID moratoriums on mortgages and evictions. This is adding so much pressure to this shift in supply and demand, where we're going to see a flood of houses hit the market at the national level, and these submarkets are going to react slightly differently, right? Miami is going to absolutely see a sea of foreclosures. Las Vegas is going to see a sea of foreclosures. I think Phoenix is going to see foreclosures, right? But they're not going to see a sea of foreclosures. It's not going to be massive. I think that the Phoenix market is actually much, much stronger than a lot of these other markets, right? And I think that we're in a very, very good spot economically, population growth, that demand is so strong and so consistent. I think we're in a pretty good spot. The big what if in this whole scenario that can throw this prediction completely out of whack is government policy. That's one thing this time that is massive difference from last time. Yeah, we have the Fed, dropping the rates to zero and all that stuff, and that happened in 2008, 2009. But look, guys, we've never had the government just say, you cannot evict somebody. You can't kick them out. We've never had the government say, you can't foreclose on this guy, right? You got to give him time. This is absolutely unheard of, uncharted territory. So guys, it's going to be really interesting to see what policy comes and what happens at the end of this year. So that is the big unknown. My prediction is that the policy is not going to change, guys. I think that we're going to stay here. There's a lot of upside right now with the vaccines. We've got like 6 different vaccines out there. I think what's going to happen is people are going to realize the forbearance, the eviction, it's a real thing. Like, holy cow, like now I might get kicked out of my house. I might get foreclosed on, I might get evicted. They're going to realize like this is a real thing now and nobody's coming to save me. And for the last 8-9 months or whatever, they've been in this boat, where it's like they can't evict me, they can't kick me out, and my financial future in the COVID times is uncertain, right? So I'm gonna stay here and just kind of ride this thing out. So once you realize like, oh man, this is expired and I'm starting to get papers about, okay, this is the process and we're gonna start it, and if you can't pay or whatever, and if they really can't pay, then this is really going to happen. And I think we're gonna see these folks realize, oh man, I've got some equity in the house, I've got options, and I'm gonna put it on the market. And once this starts to happen on a massive scale, we're going to see the inventory, supply and demand absolutely flop, right? We're gonna see supply go through the roof. We're gonna see about the same number of buyers out there. Just looking at a number of supply that's like, holy cow, I've never had so much opportunity in my life. Prices are going to just absolutely get destroyed. As an investor right now, what am I thinking about? Well, a couple different things. I'm looking at a portfolio and I'm saying, okay, do I have some properties that I'd like to offload, right? If I've got some bad deals, the cash flow is just not right, or whatever it is, like I'm gonna start looking at that and say like, is this something that I want to hold on to long term? And if the answer is no, I'm listing that thing. I'm putting it on the market yesterday, right? And I'm getting some cash out of that. I'm putting that cash in the bank, right? And I'm sitting and I'm waiting for opportunities and deals, right? The other thing, if you have some properties that are strong in cash flow and you don't really need the cash, right? You've got some other cash sitting around waiting for deals and stuff like that. I'm keeping it. I'm keeping my rentals. I'm in this for the long haul. If rentals are going to be strong, I think, over the next couple years. So I think we're going to be in a good spot there. I'm keeping my rentals. I'm keeping my cash flow, and I'm not really doing much there, right? So it depends on your strategy. Now, look, guys, the beautiful thing in real estate is that regardless of the market, there's always a way to make money here. That's the beautiful thing. It's just about implementing the correct strategy for the time. So when we're looking at a market that's about to flood foreclosures, people are going to lose their homes. Yes, it's sad, it's horrible, and stuff like that. But we might be in a situation to help build up that neighborhood and that economy. And it's on us to take those properties and give them a new life and give somebody else that opportunity, right? So I really, truly believe in what we do as investors is build up our communities and invest in our neighborhoods, right? And we help others. I truly believe as long as that is where your heart is, I think you will be absolutely successful in the real estate investing. So sit tight, sit on that cash. If you've got some property that's, maybe not your favorite property ever, I might list that right now, get it on the market, pick up some cash and get ready for the opportunities. The way that you make money in real estate is buying low and selling high. Listen, guys, this is no secret. This is not a secret sauce. This is not rocket science. Real estate has one of the best asset classes for creating millionaires out of any asset class ever. And it is absolutely critical that your timing is right in real estate. So if you're sitting on some equity and you're questioning, look, man, I could really, I don't have much cash right now to pick up the next deal or whatever, I might cash that out right now. But it's definitely on you. This is your own choice. I'm actually sitting on a property myself, which I'm teetering. I might list that thing tomorrow. I don't know, looking at this data, I'm not too sure which way to go, but I'm leaning towards I might just list that thing tomorrow. So if you would like to stay in the loop with me, guys, more data as I continue to research. I look at the Phoenix real estate market on a daily basis. I share data from the Arizona Regional MLS and about 20 different other sources. So kind of consolidate and to figure out what's going on in Phoenix. I compile the best data available for real estate investors in Phoenix. So if you're interested in learning more about that, you should definitely subscribe to my channel. I make regular content like this. Also check out my website, link in the description, put your email in there. I'll send out some data links every week, keep you in the loop on Phoenix. If you like the video, like the content, definitely click that like button. This is the best thing you guys could do for me right now is by clicking that like button. This is going to tell YouTube this is decent content and it's going to get me more views, and it's absolutely free to you guys. Wish you so much success in real estate investing, and until next time, wish you so much success. Let me just scratch my nose. I got my cord going down here. Do you guys care about that? I don't think anybody really cares, right? How's the hair? Let me check the hair. Okay. Good. We gotta get you up a little bit. You good? The heck? We got to edit that part out, okay?